Good morning, traders. Welcome to the morning update. This is Mark Owen speaking. It's Wednesday, the 14th of September. Okay, so today we're going to discuss the news and any potential trading opportunities that might be available. Yesterday, the markets were pretty interesting to say the least. We saw what you could argue is a dollar move across the board, but the only one that really didn't react, I would say, would be the euro. Now, if we look today, what news announcements we've got coming out across, we've got sterling average earnings. Now, obviously, what we're looking for is somewhere to be in the realm of the forecasted number, which is 2.1. Now, average earnings, this is the cost of labor. So this will show you whether the labor wages are increasing or decreasing. A positive number here is good for the economy, so you should see potential strength in sterling should this happen. Yesterday, the CPI missed by, I think the forecast was 0.7. It came in at 0.6. Some people thought that this was a fault on the sterling economy, and sterling fell by 150 pips. I wouldn't say it was due to the CPI data. I would say it was a dollar move. I mean, if you look at Aussie dollar and if you looked at Kiwi, all three markets pretty much fell off the cliff. Canadian dollar fell off a cliff against the dollar. Euro was probably the one that sat there strongest. Yen had a move as well, still moving today. So it really was a dollar move. It wasn't that the CPI data was that bad, in my honest opinion. And then we've got the claimant count charge, this unemployment. Last month we had really good figures. The unemployment claims fell by 8.6%, so or 8.6,000, I should say. So they're expecting a number of 1.7 today, I should say. So anything reduced or better than the forecast will be good for the economy. So watch those two. We are going to look at the sterling chart in a second, or cable chart I should say, because we could potentially use this news to take a decent intraday trade. I am bearish sterling predominantly due to obviously Brexit, interest rates, potential stimulus coming, although the data has been relatively strong coming out of the UK since Brexit. Then at 3:30 we've got the crude oil inventories. You'll find that this will probably affect the Canadian dollar more than the US dollar. You'll see the last reading was minus 14.5 million. Now this was primarily down to the hurricane out in the Gulf. So expect to see something of a more realistic figure this week. And then later on in the night, which is not going to have any impact on you trading today, you've got GDP figures quarter on quarter coming out of New Zealand. I would expect this to be quite good. If we look back at what the GDT figures, not GDP, GDT figures, which is the gross dairy price for auction, which is New Zealand's biggest export, so that's butter, milk, cheese, these kind of products. You'll see that the last few readings coming out of the auction prices are that the prices have been rising considerably. So that's obviously going to be good for the New Zealand GDP. It's their biggest export. So I would expect that we should see a positive number here for New Zealand, which could give us a rally late in the evening, and then we may be able to see the US dollar look to continue with its strength move. But I'm going to stay away from New Zealand today. Let's have a look at the charts. Let's see what we've got going on. So the Nikkei, we're going to move to Nikkei because we've been following this for so long now. I've marked on a couple of key things that we're looking at. Obviously, the 17,000 barrier was a point of interest for us. You'll see that 17,143 here, which is the 618 of this whole move. From how I draw my fibs, from low to high, we're looking at it back here. It's an inverted way of drawing them. And then we've also got this rising wedge pattern, which is a reversal pattern formation. Now, if there's going to be no stimulus, or if the Bank of Japan are going to keep disappointing them, we're probably going to see a fall off in the Nikkei. So this is something that I'm going to watch quite closely, see if we get a breakdown of this pattern, or if we are going to see a break above, then we can use it as a retest zone to get long in this market. So the Nikkei is of interest. The dollar index, well, this was the chart that I sent out to protege clients on our analysis at the weekend. You can see each major news announcement over the last couple of months: FOMC, non-farm payroll, Jackson Hole, non-farm payroll. What's been happening? Well, technically, the chart's been sticking to support and resistance levels pretty solidly, and we've been able to take some really good trades. We, based on this false break here of support, we shorted euro. We got a very nice return out of euro. We also shorted gold. Got a very nice return out of gold. Still running in gold. Now what we're looking for is a follow through. So we got a break and close above the level that we're interested in. This morning it's currently pulling back to around the 95.40 area, which is a key point. But ideally what I'd like to have seen is a break above yesterday's high of the dollar index before I'm looking at adding potentially into this move. But we'll watch this closely, see if we get a rejection of the dollar index. Now remember, the dollar index is most heavily weighted to the euro dollar. So this is where we're going to see most of the impact, and then it's also the next one down will be the Japanese yen. So this is where we're seeing the moves, let's say. So dollar yen, we can see it's been respecting this long-term channel here on the daily chart. We are getting a bull move at the minute up into around the 103.80s. This will be the next sort of stop. Well, for me, if you're intraday trading, look for any pullbacks. I would see it testing 103.80. It's only about another 60 pips to go before we get there. And then, so we avoid another one of these potential false breaks, I'm looking for a close above this particular high here, and then I'll look for a retest back at 103.80s to get long this particular market. If we are going to see weakness in the yen, we'll see that follow through more than likely on the Nikkei. We'll see the Nikkei increase in value. Okay, so cable, what we're looking at cable, so we've got a trap range here between sort of 1.3450 and 128.50. And then you see we've got a bullish channel within this range. Yesterday the market fell 150 odd pips. It's come back down, and we're looking for it to rally back up into this region here. And you'll see the next slide, we're looking at this on an intraday basis. So this is the 1 hour chart, and you'll see that we've got a nice bearish channel in here. Now you can see that it's relatively close to the pivot point, but I'm not bothered about this. We've got news at 9:30, so we do need to be careful. But it's this zone in here around 133 where we can see the top of the channel. We can see R1. We can see the intersection, which will be the retest of the daily bullish channel. So we've got 3 points of confluence here. I'm not going to put a sell limit in, but I'll be watching price. I want to see some potential good news come out of sterling, or a false break up to the upside, and I'll watch to sell it potentially on the way back down. So this is a nice zone to watch around the 133 even handle. And this isn't soybeans, guys. Sorry, this is a mistake on my behalf. This is actually coffee. I forgot to change the headline. This is coffee. I will say it one more time. This is coffee. Okay, so it is a weekly chart. This is something that we sold yesterday. Now, what you'll see is we've got top of a channel, we've got a fib retracement, we've also got a commitment of traders signal, we've also got a seasonality bearish signal. Now on Monday the market gapped down. You'll see the weekly shooting star double top formation, but we didn't sell Friday, or I should say we didn't leave an order there Friday just in case the market gapped down on Sunday night. Funny enough, guess what it did? It gapped down Sunday night, so it opened a lot lower, and then it rallied up. So as it rallied up, the protege traders and myself, we all had our orders according to our own set of rules, which we develop here. So mine was actually set on Friday's close. Some of the other guys have got a 50% fib of the shooting star. Some have got one on the low of the candle. Some have looked for intraday trades to get in on this move. So it's personal development, trader development institute that we are here at Phoenix Blue. So you see my entry here, stops above the highs, no target. I will be taking money off towards the neckline, and then I'll look to see what happens as it gets towards the low of the channel, if I should be so lucky. I will tell you that I am being very, very strict with my trades now for this month. I've hit my target for the month. I've had a fabulous few days since I've come back off holiday, and then the point for me now is I've done my return. Everyone's happy. So right now it's about being extremely, extremely selective. Okay, so I've got small positions running on trades that have already hit target, and I'm just leaving a bit to run. So I've got sugar running still short. We're going through accumulation and distribution currently. We've got coffee running, as you can see right now, and I've got my final part of gold running. Other than that, there's no other trades for me currently. So that's it in terms of the charts that I'm going to look at today, guys. But more importantly, for new traders out there, if you want to learn how to trade the markets, not by following signals, but actually understanding how the markets operate, by understanding fundamental and macroeconomic news announcements, by understanding technicals, putting it all together, understanding seasonal patterns, then what you really need to do is you need to come and speak to us, or you need to come and meet the team. Okay. The reason for this is so many people offer all these signal providing service and signals that are going to pop up on your charts. Yeah, what happens when those signals stop working? Do you know how the signals are created? Well, what we do here is we show you how you can trade and trade for life throughout different market sentiments. Okay, trending markets, range-bound markets, volatile markets, stagnant markets. Okay, it's a skill for life that we teach. So this is something that we like to develop. We have a very close-knit family here within the team. Everyone works together. We've all got a common goal, and that's success. We love what we do. And if that sounds interesting to you, we'd love to see you at one of the events. So our next event here in London is Friday the 23rd. So you've got about 8 days to register. There's no registration on the day, so 8 days to register. If you want to do that, drop an email at info@phoenixblue.co.uk or go onto the website and follow the event process. If you're in Norway, well, we are spending a lot of time in Norway at the minute, then please get in touch with us. We've got a big event coming up on the 27th and a course starting on the 28th. Now, we will be doing Scandinavia. If there's any other locations out there, guys, that you would like Phoenix Blue to come to, please drop us an email. If you'd like to maybe work with us in a different country, again, send us an email, remit, and we'll look forward to trying to put something together. Okay, guys, well, listen, have a really good, productive day, and we will see you tomorrow morning. Bye-bye.